Let's go, YouTube. This is TerrenceRe coming back with another video, updating you on the markets, updating you on some trades, and may even do a little sports talk today. Who knows? I may chop that up in another video. Right now, what you're seeing on the screen is Tesla. I did a video last week where I gave a trade that I put on in Tesla. I took it off on Friday just because with all the news coming on with the coronavirus, you got to watch what you say and how you talk about it. But, I'm not giving an opinion either way. So, but with all the news coming on with the coronavirus on Friday as the market was closing, we had a spread in, outbreak in cases in different parts of the United States. And so I just didn't feel comfortable keeping the trade on. It was still a winner, but going into the weekend, I felt I didn't know what kind of news was going to come out that, hey, maybe the market might take a downfall. So I took off the Tesla spread for a $46 winner. We'll go over it real quick. I'm going to pull up. What you're looking at right now is the Tastyworks platform. And I'm going to pull up one of my charts that I have on here. I'm going to go to this particular chart. I'm going to take off let's see if we can hide these. I'm going to close off the indicators just because I want you guys to be able to see the chart without the indicators on there. And what you're looking at right here on Tesla, if you go back, so if you subscribe to the channel, hit the like button, first of all, and then you'll be able to go back and look at the Tesla trade. Go to where I got trades or option trades, and then click on it. I only have one on there so far. We're going to keep building. You'll have another one on there after tonight. You'll see where I put this trade on in Tesla. I put it on somewhere right here in the consolidation. You see these arrows, these yellow arrows, where I kind of like put out like a triangle. You can see what's bouncing in between this triangle, right? This would be called, you can call it a pennant. In some places it's called a pennant or a triangle, right? And obviously you can see a triangle where I took the highs of daily candlestick wicks on candles on the daily. I will go through the wicks. I drew it from here down and here. And basically I took a bet on the market breaking out of this triangle to the upside. And it did. So you can see I paid right here. These F's right here, you'll see that means filled. I purchased that spread for $234 on July 26th at 1:14 p.m. I did a video on that day on this trade. And then I sold out of the trade. So I bought it for $234, sold it for $280 on July 30th, so 4 days at 10:07 a.m. And I sold it for $280. So that's about $46 per contract. So that means like, hey, if you got 2 contracts, that would have been what, $92, 3 contracts, 4 contracts, you just multiply by 46. And that's how much money you would have made on that trade. I bought a call spread at that moment, right? So I bought a call spread, meaning I want the market to go up. And that's how I got it. So, I took pocket that little trade, move on to the next one, reallocate those funds. The next trade I'm going to talk about today is Costco. I put this trade on Friday. Let's pull it up. Now, looking at Costco, you can see it's up. These are the ideal situations for me. I'm a contrarian. I like to do the opposite of what everybody else is doing. Period, point blank. If everybody else thinks the market is going up, I want to go down. I want to go the other way. If everybody thinks it's going down, the market is selling off, I want to buy dips. Most people do that. Most people buy dips, but they never think about, so if you buy a dip, you're going against the grain. The market's going down. You think the market is cheap, so you want to buy the market going down. Well, why not do the opposite? Market going up, why not short it? You're going to be able to sell it. So if you had I don't know, you selling a car, you selling any type of product. You got some video games, whatever it is. The market is hot for whatever it is you're selling. The market is hot. People want it. Why not sell it then? Why hold on to it till nobody wants it and then sell it? So Costco, look at Costco ripping. Right here, we down at what? What's this low? 307? What's this high? 429? That is a $122 up move from, what is that, March? And looking at this, some people will call this candle, just to give you guys a little quick technical jargon. This candlestick right here, where you see this long wick on the bottom, many people call this like a hammer. So look at it, like the hammer got like the fat head up at the top, and then you got the long handle. So that's what that would be. And that's where the market went down, but the buyers pushed it back up and it closed up here, the body. And so you will look at that as buyers were in control and it started to move to the upside. So at this point, I want to get up here and I want to get short, right? So we're going to talk about how I got short in Costco on Friday. I'm down on the position right now, but that's cool. I bought it. I bought a put spread I got filled at $224. I actually put it in for, looks like a limit price of $225, and the platform actually got me a cheaper price at $224, which goes into some of that, what you would call payment for order flow. So they're able to give you they're able to give me a price, what you want to call a price improvement. Tastyworks does that on their platform. I can't speak for any other platforms, but they'll give you the better price. And they're able to do that with some of the things with payment for order flow and, able to get you cheaper pricing, but, and not paying commissions on stock trades and paying very, very low commissions on option trades. So, but that's a whole nother video right there. So, excuse me. I'm actually in favor of payment for order flow. I really don't care too much about speed. You're not gonna beat the algorithm. I'm not trying to beat the algorithm, to be honest with you. I don't specialize in trading 1 minute charts or anything like that. I do look at 1 minute charts when I'm scalping, but it's more so like of a position. Scalping, same thing. Market's overbought, I just short it. Market's oversold, I buy it. You know, on those small time frames. But let's take a look. Let's get back into this. So we see the market is up, $122 since March to now, which is now August. As of Friday, it was July 30th. 4 or 5 months? That's a significant move. I'm looking for a down move now. So I said I'm gonna step in, buy a put spread. It's up. All I need is a little down move to make my money. So I came in here. I'm gonna go to the trade tab. Go to what I'm looking at is the option chain. I like to do now that I'm going to buy a put spread, right? Some people call this the box spread. Some people call this the in and out spread. Whatever you want to call it. And I'm gonna outline this. I'm going to do a class. Be on the lookout for the website. Subscribe so you can get an inside deal on the website where I will put these trades out and then people will be able to follow them at their own risk. I am not a financial advisor. I have a little bit of background in trading, so I'm gonna get out here and put these trades out. Set up a little website for you guys to pay to be able to have access to them and be able to make a little money off of my trades. I do all the work. You pay a small fee and you make a little money off of it. And I will be doing a class on this, and it'll also be on the website. So be on the lookout for that. Go ahead and subscribe. Hit that like button. That way I'll continue to pop up on your feeds and other people's feeds. That'll help me out. Now look, I went out to the 47-day right here on this, where you say I'm gonna put this back up right here in the middle. This is what you're looking at. So I went out to the monthly. the September monthly, 47. That means that this option contract expires 47 days out. That's what this means in the center. If you went here 40 days, 33 days, 26 days, that means that's how many days you have to be right or wrong on whatever option you decide to put on. So I went to 47 days out. I bought one in the money at 430. I sold one out of the money at 790. Bought the 430, sold the 425. Bought in the money, sold out the money. Thus, in, out, spread. See how the name goes along with what I did? I was going to go ahead and just so in the box would be this. That's a little thick, but you can see it. So this is the box. I drew a box. It's a $5 box. That means the risk in this trade is $5. Equates to $500. $500 risk in this trade. All right. I paid $224 for it. So if I'm into something that I have $500 risk, I paid $224. What's left? $276. So that means I can make $276 off of something that I paid $224 for. Now, I'm not looking to hold it that long. If you were to put this spread on right now, let's click on it. Let me erase that. Let's see. All right. You were to put this spread on today, it would cost you $217. You even get a better price because I'm down $7 on it. If you go to the position statement, you'll see I'm down $7 on it. So what I'm looking for is a down move. Now what you can see this ruler right here? That equates to this. The expected move in 47 days is $18. So this market could go up 18 or down 18 on Costco. If I get it to go down probably $10, I'll probably be out of it. You know, I'm looking to make, if I paid $224, I'm looking to make about maybe $100 on it. As you can see, it tells you right down here. Look right here. I'm going to go ahead and underline this so you guys can see it. Let's see. If you look right here, it's telling you I got a 49% probability of profit. That means it's basically a 50-50 shot. But if I only take 50% of max profit, I got a 66% chance of making 50% of max profit, right? So if I look to make 50% of max profit, I don't know, max profit is 283. What? Let's just say 140. If you look to make 140, you got a 66% chance of making that. That's a high probability trade. Would you not? So basically, in essence, you risking almost 2 to make 1. Would you not do that consistently and manage that? Because you're putting yourself in a high statistical or high probability opportunity of making money. So that's what I do continuously. And my channel is all about doing that and showing my followers and subscribers how to do that. So just stick with me, hit that like button, subscribe, and you'll get these all the time. Once again, I bought the. So if you wanted to follow me into this at your own risk, you know, this trade is yours. You own it. I'm not advising anyone to do this, you know. I have to say that for liability reasons. But if you were to follow me into this, you come over here and click on the ask, buy this, the 430, sell the 425, and then bam, you're into the trade. Hit review, hit send the trade off. Right when I put the trade on, I come automatically. I'm going to take this off. And automatically when I do this, this is what I do. Whatever I paid for it, which was $224, I come down here and get the calculator. I go 2.24 times 1.5, which is 1.5. 3, I sell it. I'm selling it for $3.36. Looking to make half, risking $2 to make $1. That's gonna always give you a better, high probable opportunity for making money. And I will get into that a little bit more often, a little bit more in the future. But I will put this on the this will be in the option trade category of my YouTube channel. I'm working on my web page now to where you'll be able to subscribe for a very small fee, and I'll push these trades out on the platform. So I hope you guys got something out of this. Once again, hit the like button. That helps me out. If you don't do anything else, hit the like button. Even if you don't subscribe, hit the like button. I'd like for you to subscribe. I get free information. Football season's getting ready to start. I'm a big football fan, so y'all gonna see me get my football analysis. And we're gonna go, and that's why I'm gonna have a little fun, myself. Just talking sports, talking football. I'm a big boxing fan. We got the big fight coming up with Earl Spence and Manny Pacquiao. I'm gonna talk boxing talk. We're gonna talk football. I ain't as big on basketball as I used to be. The game ain't as hard as it used to be. It ain't the Bulls and the Pistons no more, the Pacers and the Knicks and the Lakers and the Celtics. It's not Portland and LA no more. It ain't Sacramento and LA. These cats, knock you to the ground and then give you a hand up when you go to the basket. So, I'm going to talk about all that. But once again, support the channel. I got big things in the works. I'm trying to help everybody make a little money. Whether you just buying stock, you don't even do options. I'm going to talk about why I'm long gold, why I'm long China, why I'm long weed. I got an investment portfolio. I'm thinking about doing something where I'm just going to come over here and just buy stocks with people. That's it. I'm going to log into a platform and buy a stock per week. I may do that, start doing that this week. You'll be able to follow me, and we're just going to come on here, man, and just buy a stock. So you ain't got nothing but $15. I'm going to show you how to take that $15 and become a shareholder. So subscribe and hit the like button. Ain't nobody else doing that out there. I'm going to do that for free on my YouTube channel. So, subscribe, hit the like button and support. And with that, peace.